Hello and welcome to an FX Times daily video recap. I'm CMS Forex market analyst Nick Nassad. Today's Thursday, January 7, 2010. The dollar rallied overnight today as global stock markets and some commodities sank on news that China had moved towards an apparent tightening of monetary policy. China's central bank overnight sold its benchmark 3-month bills at a higher yield, the first time it increased yield since August 13th, signaling a shift in policy focused towards preempting inflation risks. Up to this point, the Chinese central bank had been more concerned about sustaining economic growth. Consequently, risk appetites and equity markets have come under some pressure, giving a broad boost to the US dollar. Also today, we had some weak euro data that pressured the euro, and traders are awaiting the non-farm payroll report in tomorrow's session, which could reveal that the US actually showed some job creation in the month of December. A strong jobs number could reinforce the dollar's recent tendency to react positively to strong US data, especially when it comes to the labor market and to consumer spending. Finally, the yen weakened in today's trading as the new Japanese finance minister said he wants the Japanese currency to weaken a bit more and that he would cooperate with the central bank to guide the yen exchange rate to appropriate levels. Here is our euro-dollar pair, and we can see that the euro-dollar has been bouncing around between resistance at around 1.4450 and support at the 1.4250 area in the last 6 or 7 sessions. Today, overnight, we had a test of the 1.4450 area, though we didn't reach it exactly, and the euro came under pressure and fell in overnight trading as a result of poor data. Also, we did have the news from China, which pressured risk appetite, which helped to boost the greenback. The decline in the pair stalled at around the 1.43 level, and we have been sort of consolidating since then as we close today's global session. The dollar-yen, meanwhile, extended its rally from yesterday after it had bottomed around the 91.20 level in this week's trading. Following a bit of a correction from the initial rally that we saw, we have now moved to a 4-month high in this pair. At the end of today's session, we even moved above the 93.30 level, which had acted as resistance in late New York afternoon trading. As we mentioned, the new finance minister for Japan commented on the yen exchange rate and even mentioned a level that he thought was suitable for the dollar-yen pair, which was the 95 level. So that's quite unusual for a finance minister to name a specific level like that, but that is the one that he desires. So this could intensify speculation that if the yen was to strengthen, that the central bank would work to intervene in the markets in order to weaken the yen. Before we move on to some more market highlights, let's take a look at today's key fundamental releases. I mentioned how in the Eurozone we had weak data, and that came in the form of retail sales for the month of November. On the month, sales fell 1.2%, which matched a record monthly drop which we had seen only in October 2008 and October 2001. Now this came in far below expectations, which had sales either flat or increasing on the month. So this was quite disappointing, and it could pressure the ECB as it implies that consumer spending remains weak in the Eurozone. On the year, sales were down 4%. Data for Germany showed a very similar drop in retail sales, as for the month of November we had a 1.1% decrease, which put the annual rate at a negative 2.8%. So both of those came in worse than expected. Also in Germany we had factory orders for the month of November, which did increase 0.2%, but that figure came in below expectations as well. So overall we had some pretty poor fundamentals for the month of November coming from the main economy in the Eurozone. On a brighter note, the European Commission did put out its end-of-the-month sentiment indicators, which showed an improvement in consumer confidence and business climate. The economic sentiment indicator rose to 91.3 for the month of December, which was its highest level since before the collapse of Lehman Brothers in October of 2008. That indicator is made up of 3 measures of sector confidence, consumer confidence, services confidence, and industrial confidence, and all 3 registered increases, though the main increase was seen in industrial confidence. Also, the business climate indicator rose to negative 1.22, which was better than expected. We'll see if this improvement in confidence translates into higher retail sales and better consumer spending as well as business spending. In the US, meanwhile, jobless claims for the week ending January 2nd inched up slightly to 434,000, but that figure was much better than expected and continues to underscore the improving nature of the US labor market. The 4-week moving average continued to decline. It's 18th straight week that it did so, and continuing claims for the week ending December 28th fell rather sharply to 4.8 million. That was the smallest amount of continuing claims since the end of last January. We've already seen the US dollar against the euro and the yen, and here it is against the Australian dollar, following a rather sharp rise in yesterday's trading, and which followed Monday's even sharper increase. We peaked out at around 0.9250, and in overnight trading we saw the greenback move back down to its 50 period moving average here with 1-hour candles. So as I said, we had a bit of a pullback in risk appetite in overnight trading, and in New York trading we've seen a bit of consolidation as traders await the non-farm payroll release. Here we're looking at the US dollar Swiss franc pair, and following a test of 1.025, we saw the greenback rally as it did have broad strength in today's session, testing its high from yesterday's session. So here we're in a bit of a range. If I zoom out a little bit, though it does seem to be favoring the greenback as we are setting some lower lows and lower highs in the process. Turning back to some fundamentals, we did have the Bank of England interest rate decision today, but it was not very exciting as the committee held its interest rate at 0.50%, and it also said that it would continue with its program of £200 billion in its asset purchase plan. So there were no changes there, and it seems that the Bank of England is in a wait-and-see mode until it gets new growth and inflation forecasts in its February meeting. On a positive note from the UK, the Halifax Bank of Scotland House Price Index for the month of December rose 1%, higher than expected, and it's the 6th straight month that the index has shown improvement. Also, annual prices rose 1.1%, which was the first increase in annual terms since March of 2008. The pound-dollar pair, which has been sliding most of this week, extended its losses in today's trading following a rise to the 1.6050 level, which it touched briefly in the Asian session. The pair proceeded to fall in overnight trading on greenback strength and fell below this level of support that we had around 1.5950. However, against the yen, the pound did rally for a second straight session, which cut into its losses that it suffered in Tuesday's session. This pair has seen a pickup in volatility following very flat trading to end the year. Following a pretty strong surge in the pound here, we did retest this area around 1.46, and now the pound is gaining again. So that'll do it for today's fundamental and market highlights. So let's see what we can expect in tomorrow's session. Tonight, Australia posts its construction PMI, while overnight Japan releases data on leading indicators. Switzerland and the Eurozone release their unemployment rates. Germany releases its trade balance. The UK posts producer prices, and the Eurozone posts its final version of third quarter GDP. Tomorrow, we get the Canadian employment change and its unemployment rate, and of course the US non-farm employment change. As I mentioned at the top of the broadcast, tomorrow's data could show that the U.S. economy created jobs for the first time in 2 years. A strong jobs number could reinforce the dollar's recent tendency to react positively to strong U.S. data, especially when it comes to the labor market. Also tomorrow, we're going to get average hourly earnings and measures of wholesale inventories along with consumer credit. So if you can, tomorrow will be a very important New York morning session, so keep your eyes peeled on the markets. And that'll do it for today's daily fundamental recap. Please do join us at fxtimes.com for more news, videos, and analysis. I want to thank you for watching, and happy trading.